Another bloody day for the S&P 500, SPY down 1.5%. But in this video, we're going to talk about this massive head and shoulders pattern on the S&P 500, what it means if we break $430, talk about this very low volume profile, and how I think we could see SPY pull back to absolute worst, $410. Now, something to notice though is that the S&P 500 on the bottom right side of your screen, this is a weekly chart. We are still in an uptrend. The top right side of your screen is a monthly Heikin-Ashi chart, and we are still with a green Heikin-Ashi and still in an uptrend. So I know that while the market's pulling back aggressively right now, and QQQ, SPY all have head and shoulders, overall, we're still in an uptrend, and trading against the trend is not your best friend. If we break $430, this could be an indication that the potential trend reversal could happen. You can see these light blue bars here in this middle screen. This is your volume profile, and your volume profile is going to show you not just how many shares were traded within a specific day like a normal volume bar would. It's going to show you how many shares were traded within that specific time frame. This is extremely important because we need, not just want, we actually need other traders and institutional investors to move the stock market for us. And so when we have these thin areas on the volume profile at from 410 to 430, those thin areas tend to fill very quickly. If we break $430, the S&P 500 would drop 5% in probably a couple of weeks. Looking at how we performed today, gapping down and closing at low of day, that is not a good sign. Short term, if we look at this 1 hour chart, that we could see some exhaustion here and a potential bounce in the next couple of days to test maybe 436, 438, or at best 440. The S&P 500 will end up breaking $430 in the coming weeks. I think we'll see SPY pull all the way back to 40 world, and all retail traders are going to believe that the S&P 500 is going to be, due for a massive crash, and we're going to see lows back of 340. SPY will pull back, hit 410, and will bounce. We'll keep the overall uptrend on the bigger time frames, and we will hit all-time highs, but probably not until the end of the year. We have, basically ran nearly 24% in the past year and a half. For us to pull back 5 to 10% from 460 back down to point of control 410, which is where my target is, that's 11%. That's a healthy correction. That was a 9% correction. This was a 9% correction. So for us to snap back 9% is not that crazy, and it's honestly pretty healthy. The major fear would be if we started to break this 410 level and started to take out here, because there is no volume from 410 down to 350. But fortunately, I don't believe that's going to happen. If you guys don't already know, we have a free Discord community down in the description. You guys get access to free courses, free live streams, free seminars, free webinars, and my trades. Thank you guys for all the support. Go check us out, and I'll see you guys next time.